Despite market uncertainties over the past few months, many have lost faith in Tesla and its CEO, Elon Musk. In fact, many have removed Tesla stock from their portfolios due to the company's unsatisfactory performance. However, Cathie Wood proves to be different as she continues to support the industry leader in electric vehicles. Don't miss this one. Even in the face of what seems like never-ending obstacles for Tesla, as optimistic as ever, Cathie Wood sees Tesla's stock rising 5 times in as many years, starting in early January. In the first U.S. trading session of this year, Cathie Wood bought more than 176,000 shares of the automaker ARK Investment Management, LLC, according to ARK's daily data. The purchases came as the stock of Tesla fell 12 after the company missed estimates for quarterly deliveries despite offering hefty incentives, reaffirming her conviction in the electric vehicle maker that many other investors have turned their backs on. As many are aware, it was a rough end to 2022 for Tesla, which discounted aggressively in the US last month, first offering a $3,750 price reduction to anyone taking delivery of a new Model 3 or a Model E by the end of the year in December, increasing the incentive to $7,500, along with 10 miles of free charging for the final 11 days of 2022. Wood's exchange-traded funds have acquired slightly more than 938,000 shares of the EV maker since October 3rd, when they started their latest buying spree, according to ARK trading data compiled by Bloomberg. However, the major FEWL said manufacturers' seemingly bold initiative didn't end up working. One could argue that Tesla was discounting cars in the previous month to set refresh tax credits that would be rolling out in 2023. But it was later discovered that the tax breaks wouldn't apply to many of the automaker's offerings. Despite this, Tesla still disappointed investors after announcing weaker than expected deliveries for the fourth quarter. Third consecutive quarter of deliveries for Tesla. Wall Street's average 12-month prediction dropped to its lowest level since October 2021 as a result of multiple analysts lowering their price forecasts for the stock in response to miss. Still, the general agreement, speaking of speed bumps, target price suggests that shares should more than treble over the course of the following year. Since Elon Musk officially assumed control of Twitter on October 27, the stock has dropped by 45, although the market has actually increased by 4 during that period. If you stretch the stock chart to its peak in late 2021, Tesla shares have decreased by 70. Investors were let down by the lower than expected fourth quarter deliveries. But the good news is that Tesla is still consuming market share. Although automakers faced challenges last year, Tesla saw a 40% increase in vehicle deliveries in 2022. If Wood has been adding to any one position consistently over the past few months, it is Tesla. She has been doing so even as the stock has been declining, and she hasn't stopped now that it has turned around this year. CEO of ARK, Cathie Wood, is still optimistic about Tesla, stating that the surge in oil stocks defies reason. Star stock picker Cathie Wood of ARK Invest stated in a webinar a few days ago that she is still positive on Tesla, the creator of electric vehicles, and that the current surge in energy stocks will soon come to an end. The Federal Reserve's aggressive pace of interest rate hikes severely hurt Wood last year, which affected the technology stocks she focuses on. However, the rally in energy stocks over the last 6 months, despite the roughly 30% decline in the price of oil, suggests that the market is now overvaluing value stocks, according to Wood, whose $6.8 billion ARK Innovation Fund is up 15 for the year to date. According to our CEO at Park Invest, a popularly owned energy select sector spider fund that tracks the stocks of energy businesses, the market is defying rationality, increased by 1.2 on Thursday and has increased by over 40 in the past 12 months. Conversely, Tesla will keep gaining market share. Reductions of at least 30 in the world's oil use over the next 5 years are projected. Wood predicts that the business would likely keep lowering costs aggressively and put pressure on other automakers to follow suit, severely harming its competition. We are as bullish about Tesla as we have ever been, Wood says. Cathie Wood, as a result, ARKA continues to be optimistic about Tesla, believing that the company will increase its addressable market share by 10 times in an email update to investors. According to Wood, there are numerous innovations in the car business that put the traditional auto industry, and by extension, traditional automakers, at a competitive advantage. The market for electric vehicles might grow tenfold by halving their cost. Wood cited the Tesla autonomous taxi platform as an illustration of an innovative development in harm's way. According to Wood, most other automakers won't be able to match or surpass Tesla's combination unless they want to incur losses on their vehicles. When asked what she felt about big businesses competing with Tesla in the production of electric vehicles, Wood stressed that's very important from a performance point of view and a range point of view. In a Yahoo Finance interview last year, ARK CEO Cathie Wood emphasized their belief that gas-powered vehicles will become obsolete within the next 5 to 10 years, and that the traditional auto industry must find a way to transition to electric vehicles. Wood claims that other auto manufacturers have strong brands and a lot of brand loyalty, but she believes that as consumers start to shift from gas power to electric and look at the specs of different cars, they won't have as good an electric V8. Tesla has expanded to become the world's biggest automaker and currently holds the top spot. The sector, as the EV industry as a whole and Tesla itself enter a new phase, the firm is positioned itself to lead the way forward, even though future results may differ from past ones. In October, another ARK executive expressed excitement about the leading electric vehicle business during a CNBC Squawk Box interview. Given that Tesla has a lot of moving parts, it's important to carefully consider if now is a good time to invest. ARK Invest CFA Tasha Keeney explained why ARK has a favorable opinion on Tesla. Although Keeney said that the percentage of electric vehicles in total auto sales is still in the single digits, we must keep in mind that the market is still in its infancy. Nevertheless, we do view Tesla as one of the industry leaders in both electric vehicles and autonomy. In a separate interview, Wood told Yahoo Finance that Elon's primary responsibility at Tesla currently is guiding the company towards an autonomous taxi platform, which I believe will happen in 2010-24. I believe he believes it will happen next year. I believe he's as focused as ever on ensuring that Tesla remains the world's leading seller of electric vehicles and is well positioned to benefit from some of the IRA's tax credits for battery cell manufacturing and locally assembled EVs. However, in order to meet its target of growing deliveries by 50 annually over a number of years, an objective Tesla warned it will not meet in 2022. Wood also told Yahoo Finance that he believes will not be able to achieve, and it's conceivable that Tesla will make concessions regarding gross margins. Bullish analysts and investors believe that Tesla will continue to play a leading role in the electric vehicle revolution that has finally gained traction. They also believe that Tesla will lead in other green energy fields like solar panels and energy storage devices. Tesla has reduced prices across its lineup in China and scheduled downtime at its Shanghai plant. Conversely, pessimistic experts and investors believe the business won't live up to the hype and will only turn into another production company instead of something special, unique, and inventive. Bears believe the company is excessively subsidized, overpriced, vulnerable to competition. Other analysts predict that Tesla deliveries will increase by roughly 40 2023, reaching 1.8 million to 1.9 million vehicles, up from about 1.3 million in 2022. If deliveries meet 2023 delivery estimates, investors will be persuaded that the company's 2023 earnings estimate is accurate and that the stock may have sold off a bit too much overall this past year. Being a strong believer in innovation, Cathie Wood and her investment firm ARK Investors still quite optimistic about Tesla shares. Wood consistently expresses her support for Tesla and its upcoming innovative projects. Invest in Tesla stock to receive updates in 2023